Taiwanese index is up around 0.6%.
The disinflation that we have seen so far has not come at the expense of a weaker labor market.
A big U-turn and late night, the company has announced that they're going to withdraw the 20,000 crore fallen offer which was subscribed the previous day.
Management was poorly advised in trying to, in a sense, ram in the FPO at the original price.
The volatility of the market seen yesterday, our board strongly felt that it would not have been morally correct to proceed with the FPO.
The markets are starting about 0.5% lower.
I've been very bearish on insurance for a while for exactly this reason, that they don't sell protection. Only 10% of life insurance companies is individual protection.
Wealth arm is now saying that they're not going to accept Adani Group securities, both bonds and stocks, as collateral for its wealth unit.
Currently, the Nifty is down 27 points.
ULIP and term products are excluded from this tax. It's the savings life insurance policies which will come under the ambit.
US specialty revenues stood at about $235 million, growing at 28%.
E-Rupee will be another mode of payment. It's replacing the physical cash.
Nifty is down 66 points.
Well, the moves continue and sharp moves once again. You're with us here on a fresh new edition of Closing Bell. I'm Prashant, and with me, we've got the full Marvel team joining us. Rima is here, Surabhi is here, Nigel, of course, makes a presence as well.
Absolutely.
Nigel, welcome to the studio.
Thanks so much.
Welcome, actually.
It's been a long time. It's been a long time, but yeah, it's good to be here, and it's going to be an exciting 60 minutes, let me assure you, because it's expiry that's going to play out. Plenty of queues out there. So hopefully we can handle it.
Yeah, no, absolutely. I mean, I think between all of us, we'll try to. But the thing is, it is volatile out there, still very volatile. And as we begin this last hour, look at what the market is doing. I mean, we were down 100 plus points, we were down 40. So you're seeing very sharp 30, 40, 60 point moves, compressed moves coming in just like that. I mean, in a few minutes, and then they disappear. So gains are not staying, losses are not staying as well, which I think sort of you can look at it depending on whether you're optimistic about prospects or pessimistic. But that's where we find ourselves at. I said this in the morning, and I think it still holds true that incrementally, if you just broadly want to think about what this dire Adani news flow does to the market, incrementally the Adani news flow the impact should moderate on broader markets. I mean, it's not possible that every day you will have, it is possible that every day you'll have a Adani headline, but it doesn't seem possible that, the market will sell off on the same issue with the same intensity. We've had 2 days, actually this is the third day that we've had. I think you can call this a third day of significant market volatility because of this issue. But I think as we move forward, maybe this moderates. The impact itself moderates because there is no, it becomes a known entity in that sense, even as we find out more in terms of how this goes. Just one thing, and I don't think we were just discussing this before we hit air, that I think one thing which has not been discussed is, what's happening globally. And it's seeming very, very good from a global price action perspective and news flow as well. Technically speaking, both the big indices, the Nasdaq and the S&P, look like they're starting something new. Of course, we had the Fed not pushing back to markets rallying and throwing in that term disinflation 10 times overnight. So I think that is another thing which is building up. At some point, the market here will take note of it once I think we are through with all of this. On the Nifty, and I think on the upside, anything which may come we'll take. But on the downside, I think it's good if these levels hold 17,353, which is yesterday's low, and then the 200-day, which comes in at 17,291. Guys, hi.
Hi. So the low today was 17,450. That was hit in minutes of opening, right? At about 9:50, 9:30 thereabout. The high was hit immediately after that, 17,650. So first half an hour of trade, you had a big 200-point swing. And after that, all the volatility that we've seen has taken place within the 200-point range of 17,450 on the way down to 17,650 on the way up. That said, in the last 30 minutes at 2 o'clock, the markets had a big swing down, and since then, they have started moving up. 17,560 as we speak. It is the weekly options expiry today, so watch out for the last 1 hour. Global markets are in fine fettle. Take a look at the European indices right now. The CAC, DAX and the FTSE showing you gains of close to about 0.7, 0.8%. And a word on the global markets. Today, 3 key technology companies report their numbers. Amazon, Alphabet and Apple. Meta already reported their numbers post-market hours yesterday. Good set of numbers, but now the focus will shift to these 3 tech giants. And of course, the Adani saga continues, but today you've got the defensive FMCG and IT stocks batting for the Bulls. Strong numbers coming in from Britannia. ITC reports numbers tomorrow. It's lifted up HUL with it. IT names like Infosys, HCL, TCS, all of them also showing you significant gains.
Yeah, absolutely. I think, and the consumer names have really been doing the heavy lifting. And we had some great commentary as well from Britannia for that matter. I mean, very confident sounding management talking about broadening the base, making it a complete food company, so to speak. And the market seemed to like the sound of that. I think they've outlined sort of taking revenues all the way up to 50% coming in from the non-foods, non-biscuits business in their endeavor of making this a full foods company. So that's a stock that's definitely in focus. We'll talk more about that. I just want to pull up the dollar as well. Rima's already spoken about global markets. The dollar is also on the back foot ever since we had the Fed announcements come in. So that also sort of is a bit of a comfort factor if you're looking at the global setup. So not too much happening, absolutely flat. So the dollar seems to be taking it fairly easy. We will get more central bank decisions, Bank of England and also the European Central Bank. And if they toe the Fed's line and also start talking about, maybe disinflation or the fact that inflation's peaked out, that could be music to the ears of markets worldwide and probably in India as well. But so I guess, Nigel, the point is that, as Prashant said to begin things off, the fact that the Adani damage didn't really rattle the market today. It was more or less contained in that group of stocks. I think that's one thing to take heart from.
I think it's playing out well for the bulls from now on, because you're going lower to around that 17,300, 17,350, 17,400 mark, and you're bouncing from there. And today was a perfect opportunity to see some bit of short covering. So let's see what the data suggests at the end of today. But we went to the low, as Rima mentioned, 17,450 in the first 5 minutes itself, and we bounced from there. The important support will be 200 EMA. Good to see that we haven't yet visited that mark. But the options data is quite interesting. The 17,500 put as we speak, let's get that up for you on the screen. It added close to around 1 crore shares. And the premium out there is down to almost zilch. It was at around 45 rupees at the start of today. It's come down to around 3-4 rupees odd. So the 17,500 put is being written very, very aggressively in today's trading session. 1 crore shares being added out there. On the upside, 17,600 call. Start of today, it was 90 rupees. Last I checked, it was around 20-30 rupees or thereabouts. So the levels that you're tracking now is the support. Well, it's at today's low, and because we saw writing at 17,500 put, that's why in fact you get that support zone out there. On the upside though, I'm just taking a rough average for majority of the day. The 17,600 call, the premium's been in that vicinity of around 20 to around 35 rupees odd. So between that 17,625 to 17,635, that's a bit of a resistance zone. I'll tell you what, we are currently at around 17,600. If in the next 20-30 minutes, we can somehow get back to around that resistance zone that's up for you on the screen, we could see a big short covering bounce because this markets are net short. As of now, the bears will look to defend that resistance mark, Surabhi.
Okay, all right. So, well, that's the setup with which we are getting into the last half an hour of trade. Let's quickly run you up to speed, bring you up to speed with everything that we've lined up for you on the show. In fact, we'll start off with the closing strategies for this last 1 hour. Jay Bala of Cash the Chaos is with us. Jay, great to have you on. So first of all, I mean, I think a lot of people in the market are heaving a sigh of relief that it's not capitulation all over again, given the Adani news flow. I still remember you from, I think we were speaking just a day before the budget, and we know that you are keeping a very cautious view. What's the sense from here on? First of all, at the index level, what are the levels that you are watching?
Yeah, thanks, Surabhi. The critical support is 17,280, and the markets yesterday came a little bit close to it, but not too close. So as long as the markets stay above that, it's good for the short term. But the medium term, as I outlined on Tuesday, it's still the same. It's quite bearish. And I think the budget day highs right now, that will put a ceiling on the market moves. That's my opinion for the moment. But when it comes to the banking index, it's looking slightly weaker than that. And the short-term support is about 39,170, and we could see an oscillation between 39,170 and 42,000 in the short term.
All right. Hi, Jay. You've been very, very cautious, Jay. I'm wondering whether at some point of time the markets break out and then you turn your stance. But for now, congratulations. I mean, you were in the minority camp that was calling out a bit of a dip, and that's happened. Let's talk about the Nifty Bank. You've given the support zone around 39,200, I think, is what you mentioned out there. That's crucial on the downside. On the upside, 42,000 is what you're looking at. But in the near term, do you believe that there is a case that the Nifty Bank pops up? Because that's got a harder knock.
See, the Nifty Bank has actually outperformed before coming here. So,
yes.
The resolutions happened to the lower side. So the pop could exceed the short-term resistance at 42,000. But, the setup for SBI and ICICI, they are quite weak. And so, the bounces are likely to get sold into. So in any bounce that exceeds 42,000, it's going to be fleeting in nature, not a sustainable one. And because of the index structure, I think even SBI has broken down below the trend line from the COVID lows. So SBI, ICICI, both are below the trend line from the COVID lows. So they are bumping against the resistance at the moment. So slight bump up for the expiry, but nothing beyond that.
Okay, Jay, do stay on. We've got Godrej Properties joining in. The company reported a good set of Q3 numbers with the highest ever quarterly bookings and strong volumes. Pirojsha Godrej, the executive chairman of Godrej Properties, is now with us on the show now. Hi, and thanks so much for joining in. Before we get chatting about the Q3 numbers, wanted to understand from you the budget impact. The cap on exemptions for capital gains is now at 10 crores, which was not there earlier. Do you see this impacting the high-end luxury sales for you? And if yes, what percentage of your overall sales volumes and value comes from that segment where the property value is in excess of 10 crores?
Great to be with you. I think the budget overall has been a very good one that will be quite pro-growth and therefore beneficial to overall economy as well as to the real estate sector. I think on the specific question about the tax exemption on capital gains over 10 crore, which is not necessarily the same thing as the apartment value being 10 crore. Our interpretation is that implies that the gain on the property would have to be more than 10 crore.
Yes.
But in any case, that segment of the market, I think, is a very, very small segment of the overall residential market in the country, and certainly for Godrej Properties would be a negligible part of our business currently. And even from an industry perspective, I don't think it will be a very big impact, because in addition to that, there have also been other tax adjustments, like on the surcharge for people earning over 2 crores a year, where the effective income tax rate has reduced. So I think overall, I don't expect any change in the demand in the luxury sector. In any case, it's a very small part of the properties.
Pirojsha, if we could just request you, I think there's a lot of background noise that was just coming through. So yeah, if we could just...
we'll just fix that, yeah.
If you could just fix that, yeah. Yeah, please continue. So you're basically saying that this 10 crore cap, this is not going to have any sort of an impact on your business?
That's correct. I think this 10 crore cap, as I mentioned, I think, it might be less than 1% of our property sales.
I think it'll be even less than that, Pirojsha, because the gain has to be 10 crores, right? But anyway, let's move on. Let's talk about your numbers then. You believe the budget is good? This impact of this 10 crore limit in terms of an exemption, you believe it's not going to have a big impact on the business as well as for the industry on the whole. So let's talk about numbers. The good part is you had put out a guidance, a booking guidance of close to around 10,000 crores. Now you're saying that, you're well positioned to get past this. How much are you going to beat it by, the 10,000 crore mark? And now how does it set you up for FY24?
Yeah, I think we're very happy with the progress in the year so far. I think we ended the third quarter with about year-to-date sales of about 8,000, just under 8,200 crore of sales. Q4 is typically a pretty big quarter, so I think we should go well past that 10,000 crore. Where, exactly where we end up will be a function of, how many launches end up happening on time, and sort of the exact response we see. But I think we're very satisfied with the numbers so far and quite confident of another good quarter this quarter. I think even more exciting for us, though, was that this third quarter was our best ever quarter for new business development. We added 9 new projects with a total future booking value of about 23,000 crore just within the quarter. So I think that sets us up very nicely for continued strong growth on the top line in the years ahead. I think the opportunity for leading property developers is at least a 20% year-on-year growth, given the kind of opportunity there is both to participate in the sector's growth, but also to continue to gain market share.
All right, Pirojsha, at the 9-month mark, you're close to around 8,000 crores, as you said. And quarter 4 is the heavy quarter, right? So, even if you do what you did in quarter 3, then we're looking at a number in excess of around 11,000 crores. Gettable?
I hope so. Again, I think we'll have to execute well, but I think it's certainly possible, and the teams are certainly very geared up to make it happen.
Pirojsha, hi, good afternoon. Prashant here. I don't know if we've asked you this before, but stock markets are a big spin-off for. This is obviously anecdotal because we don't have hard data. But I mean, it's quite common, at least in cities like Mumbai, which have got a big investing culture where people sort of sell shares to buy property. And for the last year or so, over a year, markets have not been doing well. They've been kind of flattish. By the way, do you have any data on? Do you keep this kind of record? What are the implications? This is pure wealth effect, right?
Yeah, I think it's a bit of, you have two sort of contradictory effects in some ways. On the one hand, when markets do well, people have made money, they want to invest some of that into real estate. On the other hand, if markets don't do well, you also can see some excitement on a relative investment basis, because people think that while property investments have underperformed over the past 7 or 8 years, that now we might be entering into a different leg of the cycle. So it's hard to sort of disentangle all of that. But I think more important for us than investor demand really is end user demand looking quite strong. And I think over the last couple of years, fortunately, that has clearly been evident. And our sense is, usually each leg of the cycle does tend to last between 7 and 9 years. And we're probably now in the second year of the cyclical recovery. So we're quite optimistic about the next few years, which is also why we are trying to disproportionately invest into new business development to make sure that we have in place a portfolio that can sustain the kind of high growth rates we hope to deliver over these next few years.
Pirojsha, just very quickly, before we run into the break, just give us a sense on pricing, whether incrementally you are seeing gains, and if so, in which pockets around the country. And just a word on your land acquisition plans as well. Will you be spending a lot more in FY24 on land acquisition?
Yes, I think to answer your second question first, we certainly intend to continue to invest in business development during the current calendar year. We continue to see good opportunities and hope to build on this momentum we've seen. In terms of price increases, I think, across all geographies and across all price segments in residential real estate, we have seen price appreciation over the last year. I think that's varied from sort of single-digit price appreciation in some markets to somewhere like NCR, which has probably seen 25 to 30% price appreciation over the last 12 to 18 months. But our sense is that the next couple of years should actually see quite robust price appreciation. Typically, the way the cycle works is in the first 2 years, the recovery is more focused on volumes, which we've seen pan out across the country. And then you start seeing pricing momentum to take place in sort of higher order, as has already happened somewhere like NCR, but probably hasn't happened to the same extent in most of the other markets yet.
Pirojsha, your clientele would be hoping you go easy on the pricing, though the stock market participants and shareholders will say, go for it. That's what helps you in terms of sales, revenues, profitability as well. Before we let you go, very quickly, on a scale of 1 to 10, we are supposedly at the start of this real estate cycle that was asleep for the last 10 years. Where do you think we have reached?
I think if it's as I said, if it's a 7-8 year cycle, I think we're in year 2. So I think there's a long way to go still, and we're certainly very optimistic about the prospects.
Pirojsha, thanks very much. Great speaking with you. Appreciate you joining in with that perspective. So thanks very much. Markets, by the way, are blinking red and green like a traffic light. Absolutely flat. We're down 30, up 30. So very sharp, quick moves coming through. on the indices. We'll take a very quick break here. On the other side, we have N. Jayakumar of Prime Securities joining in with his market outlook. Jay Bala, of course, is with us as well. We'll keep going back to him. Jayakumar coming up on the other side. Okay, welcome back. The market is down, 17 points, 17,600 is where we find ourselves at. N. Jayakumar is Managing Director at Prime Securities. Has seen many such episodes in the market over the last 20, 25 years or so, maybe more. Jakes, great to have you with us here. Appreciate your time.
Thank you.
How are you viewing this? Because there is so much opinion and so much heated debate about what is the impact of the troubles at Adani Group. Is it going to be limited to the group, or will it continue to fester and kind of feed through and seep through to the rest of the market as well? Let's start there. What are your thoughts?
So for starters, let me say that, India clearly needs risk-taking. It needs capital formation. It needs the animal spirits to be back, because I think private sector capex has been going through significant degrowth over a period of time. And really speaking, the government has had to sort of shoulder the entire, the infra push, the capital expenditure, if you will, the entire growth in capital expenditure has come through the government space, the government sector. So from that point of view, I think private sector needs, I would say, the kind of entrepreneurial zeal and zest that the Adani Group has, execution, taking on as much as they are doing. And therefore, I actually wish them all the luck from an India standpoint. This has nothing to do with equity valuations. This has nothing to do with fundraising. Financing and capital structure are completely different. Capital formation and creation of capital assets is a completely different subject altogether. The way I would look at it is, of course, we need this kind of entrepreneurial zeal and zest. And my own assessment is that maybe at a particular price, the offering didn't go through. My own sense is that at a different price level, maybe they will raise money. And I have no doubt, just having seen the way the group they respond very quick to market, stimuli and market feedback. And while I'm one who believes that, Hindenburg is no SEBI or no regulator for whom we must sit and put out these responses. I mean, that's not the court of, where you need to answer kind of thing. That's not the case. But I think to the extent that they have clarified, to the extent that they have done what they have, I mean, it's whether it's adequate or not, that's for investors to determine. I think the reality is that in creating these assets, there are challenges. Equity is required. And maybe the answer lies in determining at what price and what value the equity can be floated. And considering that their ownership levels are very high in many of the Adani Group companies, I'm sure they'll find a level at which maybe the dilution is a little higher, but equity will get raised. I have no doubt about it, especially given the kind of marquee assets that they have in the cement space, ports, etc. There's no reason to believe they wouldn't raise money. Maybe as I said, the aspirations of fundraising were not in consonance with what the market was willing to bear. And that's the reality that you need to face, which I'm sure that any progressive group will realize and move on in life.
Jayakumar, so let's talk about some of these marquee assets, right? Adani Ports has fallen from levels of 750 a week back, now down to 475. Ambuja Cement, another one, fallen from levels of 500 to 350. Do any of the Adani Group stocks look attractive to you right now?
I'm not recommending any specific stocks. I don't talk specific stocks. I think the question clearly was, do you believe that the entire sort of happenings around this Adani thing will impact India, etc.? And my response was merely in conjunction in that context, which is to say that even from a group perspective, I wish them all the luck that at the right value, equity can be raised and will be raised. I have no doubt. As regards which stock is attractive or otherwise, I'm no one to, and I don't recommend stocks at all. I don't talk stocks, and I don't wish to go down the path. Of course, when corrections happen, all group stocks fall. Fine. I mean, some may have fallen far more than their fair level. Some may not have. That's a different thing altogether. But I don't think the discussion should be on individual stocks, much as many sort of analysts or speakers on your channel, come and talk specific stocks. That's their domain, not mine.
Jakes, sorry, Jakes, you're not sort of putting your. I'm not asking you to put your neck out there. You don't have to do that. But what is your view? You're not giving us a view, and you have a view. So I'm just asking you, what is this?
The view, as I said, is very clear. Their port assets, their cement assets, their airport assets.
Okay. So you're saying this sell-off that we're seeing is become excessive now. That's what you're saying.
No, I'm not saying. I'm saying that at what price to dilute is a function of market conditions and the investor skittishness not being there. Right now, every group has to determine what they need to in terms of raising money at what valuation. I'm only saying that the assets that they have are visible, are marquee, and are of national interest. That's the limited point on it.
Yeah, I think there's a fair amount of agreement on that, because these are hard assets. They're visible to the eye, and there's no disputing the fact that there is this airport, there are the power projects. So that I think there's a fair amount of agreement on that. Jakes, hi, Surabhi here. Good talking to you after a gap. I want to sort of pull out away from Adani to the rest of the market, and the market seems to have caught this winter chill, which is not going, even though winter is leaving at least Mumbai. I mean, there's Adani, you can blame it on the rally of 2022, and then there were the nerves before the budget. So many of these events are over and done. Then there's this whole talk of money shifting to China. It's all talk. I just want to get your sense on what's bothering the market, and if you see that changing anytime in the near future.
Well, I must tell you that a lot of things are bothering the market. The fact of the matter is that FPI holdings are down to 2008 levels in the market. So they have been continuous sellers. They have seen a sharp outperformance as far as Indian markets are concerned. And now they're seeing China responding post-COVID. The Chinese markets are up over 55% from their lows. So clearly money has moved. And internationally or domestically for that matter, maybe less, but internationally funds move in consonance with where the returns are going to be, even in the short run, higher. And if there's going to be such a sharp move that you had a 55% move from the bottoms in China, and Indian markets have stagnated or gone down, the outperformance of close to 23-24% of the last 1 year has already been cut down to about 12-13% even in 1 month. That is the Indian market outperformance. If you take Jan 1 of last year up to today, vis-a-vis, let's say, China or some of the other markets in the emerging world.
My question, Jakes, is do you see this continuing? Because, I mean, a lot of people argue that, that it's just a tactical shift. Some money shifting to China is understandable. Will the winter continue for India?
So the way I see this is that the kind of resilience the Indian markets have shown, the kind of local buying that has supported the Indian markets even during this period of time, leads me to believe that the FPI selling may have climaxed or maybe close to climax, unless, of course, something quite dramatic happens. So especially given that world markets are actually moving higher, even in the short period of time, the degree of outperformance is narrowed. FPI holdings are down to 2008 levels. I, for one, believe that FII flows will restart. I mean, or at least taper off in terms of the selling frenzy. I do believe, on the other hand, that the rupee will weaken or could weaken, given external payment issues and the fact that exports haven't taken off. But the fact is that the Indian markets have shown resilience, and in the face of an international rise in most markets, I don't see the Indian markets continuing to underperform significantly. That's the point I'm making.
All right, Jakes, before we let you go, I wanted your view on the PSU banking names. For the time being, I just want to focus on the Titan numbers. We have a bit of a cheat sheet that comes in from Titan, normally.
Sure.
And, as we speak on the top line, there's a bit of a beat, or it's more or less in line. The problem is that the EBITDA number has missed estimates by close to around 8%. And that's the reason why the stock is down close to around 2% as we speak. Remember, we're working with some bit of a compression on a year-on-year basis. The compression, though, is more than expected. It's coming at around 12.2%, and the number we were working with was more than 13.5%. So that explains why that one's getting a little bit of a harder knock. Mangalam will join us in just a bit. But, Jakes, we're talking about the damage on the Adani Group and the collateral damage that's taken place on some of these banking names. The PSU banks in particular, everyone was bracing for the best next maybe 18 months or so. And that seems to be still on course. Would you look to get into some of these names? Valuation-wise, there is some comfort as well out there.
Absolutely. I think the PSU banks are a screaming buy. I don't believe, post everything that they have gone through in terms of cleaning up, etc., that if this entire fall has been, which is almost, I would say, about 20% from the peak levels in most of the PSU bank stocks. I think it's just made these stocks 20% cheaper to get in. I have no doubt, and I think it's a table-thumping buy at these levels. And I do not believe they're going to get affected by any one large group's perceived issues that the market may be reacting to. But the fact is that these PSU banks were at the receiving end of a lot of inflows, and maybe that's at the margin tapered off and has created this this fall. But I think these are great levels for people to enter, especially the top 2-3 banks in the PSU space.
Okay, all right, Jake. It's always good hearing your thoughts. Thanks so much for stopping by and giving us your view. Looking forward to having a little longer chat with you in the coming weeks. Well, let's focus on those numbers then. You know, Titans moved to the low point of the day. As we mentioned, the margin miss is something that the street doesn't like. Manglam's joining us now to run us through a quick analysis on that front. Manglam, a miss. The stock is down 2.5% now.
Yes, you know, Titans lower by 2.5% right now. That's because the street is worried about the way the margins of the company have performed this time around. 1,330 odd crores is the company's EBITDA. The street was working with a number slightly higher than that. But importantly, you know, the margin miss has come in largely on account of the sale of gold ingots that the company has done. So I was looking at the notes to the accounts. The number of the gold ingots is basically, you know, excess gold that the company keeps selling every time. So they've sold around 314 crores worth gold ingots in the third quarter, and the same time last year they had sold about 54 odd crores worth gold ingots. So this is basically a lower margin product, as a result of which their jewelry margins have compressed by about 200 basis points year on year. But other than that, all the other numbers are largely in line with street expectations. So it'll be interesting to see what the management commentary on you know, growth going forward is with regards to margin, the studded share ratio, etc. But this time around, it so appears that the miss on the margins is on account of two factors. One, lower gross margins because of the higher gold ingots that the company has sold in the jewelry business. And secondly, a mild increase of about, you know, 0.1 percentage point or about 10 basis points in their advertisements as a percentage of sales. That's become 1.9% as compared to 1.8%. So those are the couple of factors that have impacted margins harder than what the street was expecting. Will be important to see where the stock goes from here, primarily because the top line numbers were largely digested by the street.
Okay, Mangalam, thanks a lot for stopping by and giving us that quick analysis. Well, I'll tell you what, we'll analyze those numbers in a little greater detail. For the time being, we'll slip into a short break. When you come back, our technical expert will be joining in to run us through a buy or a sell call, and we'll also be getting a fundamental view on the markets. Stay with us. Welcome back. Well, as we speak, the Nifty has moved into the green yet again. Unsure how long we'll stay in there. But earlier today, you know, when the SGX was suggesting more than a 100-point downtick, it clearly suggested that we could see a bit of a short covering bounce that'll play out because the global cues were fairly positive. And since its expiry date, it appears some of those call writers, they're getting stuck on the wrong side. And now we're moving higher. So let's see whether or not this can extend. But good to see some green on the screen. But let's focus on PSU banks. Well, we had Jake Kumar who just joined in, and in fact, he told us that he would be positive on some of those names. Remember, those stocks have seen a sharp correction post Heidenberg's report on the Adani Group stocks. Abhishek joins us to run us through the hit on the stocks as well as how do valuations pan out now. Abhishek?
Well, Nigel, as you mentioned, you know, PSU banks have seen massive wealth destruction in last just 1 week on account of exposure to the Adani Group. So, stocks have declined anywhere between 6% to as high as 13% in last just 1 week. So, SBI is down about 9%, Bank of Baroda nearly about 13%, Canara Bank about 8.6%, PNB more than 7%, and Bank of India about 6.24%. So, we had brokerages who had written note on account of the exposure to Adani Group of various banks. CLSA has mentioned where does the debt sit was the headline of the report. They say that most banks have indicated that they have largely financed strong cash flow based you know, entities in Adani Group. So ballpark exposure based on FY24 figures, private banks have about 0.3% of the loans and around 1.5% of their net worth, while PSU banks have about 0.7% of the loans and nearly about 6% of the net worth. Jefferies had also written a note on exposure of banks to Adani Group. They say that the consolidated debt of Adani Group is about 1.6 lakh crore or about 1.6 trillion rupees x of shareholder sub-debt. So debt to EBITDA is actually down if you see from FY16 level of 4.3%, it's now down to about 3.2x in FY22. So diversification of borrowing mix has actually cut the Indian bank exposure to the entity, which is now about 33% percent of the debt, or about 0.5% of the sector loans. So they are watching for the progress, but they see limited or low risk for the banks. They say that debt to the group, that is Adani Group, forms about 0.5% to 0.7% for PSU banks and about 0.3% for the private lenders. Back to you.
Thank you very much for that, Abhishek. Just take a look at Dabur's Q3 numbers. It's a miss on the top line. The street was anticipating a revenue growth of 5.5%. The companies delivered roughly a 3.5% top line. Volumes were anticipated to grow 2%, but volumes have fallen by 3%. So there is a clear miss. The rural pressure, the distress is hurting Dabur, and the stock is currently down close to about 2%. On margins, it's lower on a year-on-year basis. EBITDA margins are down year-on-year, but slightly better than what the street was anticipating. But the miss right now in Dabur, at least, appears to be more on the top line. We've got Jay Bala, who is with us on the show, and we've got Mayuresh Joshi or William O'Neill as well with us. Do we have Mayuresh? Okay, so before we get to Mayuresh and get a comment quickly on Dabur, Jay Bala is here. Jay, any trades that you would recommend? 20 minutes to go. Any BTST calls?
Yeah, the IT stocks have been doing well, so I have one from that sector. LTI Mindtree, that's extreme short-term setup. Buy for selling tomorrow. Stop below 45.60 and potential to see somewhere close to 46.40 to 46.70.
PSU banks, I mean, Abhishek highlighted. Have you looked at charts there for PSU banks, Jay? Anything looks interesting?
Yeah, actually, some of the PSU banks are still, looking like they have an incomplete up move pending, but it's not a uniform one. SBI, as I said earlier, I think that speaks very clearly. But when it comes to Bank of Baroda, Bank of India, and possibly even Punjab National Bank, they might still have a short-term upside. Bank of India, as long as 75 is protected, it's good. PNB, as long as 48 it's protected, it's good. So there's potential for going back to the recent highs, but these levels or slightly below that needs to be protected.
Okay, got that. Jay, always great having you on the show. Thanks very much for being with us and taking us through some of those interesting trades that you're looking at. Mayuresh Joshi is with us, as Rima pointed out. I think he's joining us now. Yeah, Mayuresh. Hi, good to have you on, Mayuresh. Starting first with FMCG, because that's where the headlines are coming in from. Great set from Britannia, ITC, what do we even say? But then you have a Dabur right now where obviously, it's a different story out there. The rural pressure is very much showing up in the top line, though they've actually been fighting hard on the margin. Our numbers were expecting a greater compression, and they've managed to fight at the EBITDA level, but the problem is in the top line. Your thoughts? Let's start with a stock like Dabur. It has the valuation comfort behind it compared to some of the others, but would you go for it?
Afternoon, Surbi. No, looking at numbers, I think the price increases that have been taken by most FMCG companies in the previous 2 to 3 quarters to offset the input cost inflation has largely been playing out in terms of the margin performance. Obviously, I think the adverse effect comes down in terms of volume growth, and that probably is getting witnessed in Dabur at this point of time. However, I think the entire focus that a lot of FMCG companies have laid forth is the direct distribution reach and the rural reach as well. Along with that, a lot of these companies are getting into cost-saving programs as well. For Dabur in particular, again, I think we need to go into line by line on why the performance specifically in terms of volume degrowth was and what the management take is. But generally, I think if you probably look at the other set of numbers, and as you mentioned, Britannia, I think a very, very strong set of numbers. 3 key inputs, wheat, sugar, and milk, they are probably showing signs of stability at this point of time. We've obviously also seen palm oil prices come off significantly over the past 4 quarters. And therefore, the kind of expansion that you saw in gross as well as EBITDA margins was exemplary. I saw Mangalam's interview with Varun Berry as well, getting into food products, croissants, cakes, ramping up, as I said, the rural network and the direct distribution reach as well should probably prop up even stronger cash flows going forward. So yeah, I think no negative news for ITC in the budget as well in the pack again. Okay. A very marginal increase in terms of understand. So ITC Britannia probably stay on top.
Okay, all right, Mayuresh, just hold on. In the ACC, this is positive news actually. I'll tell you what, the street was questioning about ACC's cash balance out there. Now, a lot of the sell-side analysts were asking them to clarify, how did your cash come down? They've put out a detailed, BSE announcement, and I'll read this positively because they've given line-by-line item about how much they've spent on capex, how much of it is because of the dividend paid out, and this was something that the street was waiting for. So yes, the group is in a bit of a tizzy, but one reason why ACC was underperforming in the last few days was because the street was a little bit doubtful about this cash. So there were question marks that were raised. The sell side will appreciate this, the effort that's being made out there, that they've clarified line by line how exactly that cash balance has come down. And I think this is a step in the right direction because they had some capex that they were incurring. There was dividend that was paid out. There's a bit of an expansion on the working capital days as well. And that explains why the stock has recovered a little bit. Remember, Ambuja Cements is up 4-5% odd, but ACC didn't participate because they were waiting for this clarification. So good move, I think, by the management. Mayuresh, well, valuation-wise, ACC is the one that has that valuation comfort, right? What's your view on it? I mean, among both these two twins, would you go for any of them, ACC or Ambuja? Or do you believe that you rather stick to the other names, the Ultratechs of the world that were otherwise going to face some bit of a challenge from both these two?
Absolutely. So in my opinion, again, I think what we're looking at in terms of the entire perspective when it comes to the cement pack as a whole, the EBITDA performance for cement companies were subdued because of input prices being significantly higher and they sitting on high cost inventory as well. On the valuation stacked up, you're absolutely right, Nigel. I think ACC is probably one of the most lucrative bets at this point of time. But again, I think the kind of news flow that is surrounding it, and again, I'll have to go through this mail that has come through from the company at this point. But again, I think sticking with leaders, as our O'Neill methodology always believes in, Ultratech probably stands very, very close to its pivot level. And therefore, I think the kind of EBITDA performance, as I mentioned, 900 rupees per ton, you will see a significant accretion happening. Both high-grade and medium-grade coal have come off significantly. Some spurt that you've seen in the last couple of weeks, but still significantly lower year-on-year and quarter-on-quarter as well. And therefore, the new inventory which comes through will push through on a quarter-on-quarter basis sequentially 300 to 400 rupees EBITDA per ton in a positive fashion. Add to that, freight costs remaining extremely constant at this point of time should add another 50 to 100 odd rupees. They're pushing in volumes. They've done that in the past quarter. Again, I think the capacity increases that are happening will probably entail utilization levels start ramping up as we go ahead.
Got it.
And overall, I think the expectation of the speed was wide decent as well. So yeah, Ultratech probably.
Nigel, just one point. A lot of the capex and dividend, this would be declared, right? So this should, I mean, the numbers should add up.
Yeah. No, so I'll tell you how it worked. When they declared their numbers, the cash balance that was say 4,500 crores odd suddenly has come down to around 3,000 crores. So the street was doubting. Just doubting. I mean, why did it come down by such a large margin for someone who's generating so much of cash? And for the last 48 hours or so, I've received various queries from sell-side analysts.
No, my point is this from because they have given two numbers, the debt as of 31st of December and then which was the beginning of 2022.
Yes.
Right?
So there's a difference of about 4,500 between the cash they had at the beginning of the year to where it finally was at the end of the year.
But that difference would be disclosed as part of earnings, etc. I'm assuming.
So I'll tell you what, the cash they've given it quarter-wise, to clarify on that. That's point number one. The second factor is, normally you wouldn't look at companies with a lens, but since the current turbulent times, that's what made sentiment a little bit more negative. So this was a plea from the sell-side community that they wanted to know, give us a detailed explanation since, they're not really talking to media.
So this is in a way kind of putting the focus on this because there was a bit of a demand.
There were a lot of queries.
If someone poured through the numbers, I mean, I think all of this would be there because they would have released it as part of quarterly results, etc.
Actually, Prashant, there was still some bit of a grey area out there. So this was a request from the sell side that, to get some clarity out there. And it seems if, that's why there is such a big underperformance because otherwise ACC valuation-wise, it's trading much cheaper
than Ambuja.
To Ambuja and to the entire cement industry as well, for a 35. It always traded a bit of a discount, but this was sharply. And I think the street has taken that positively. It's moved into the green post.
So there are three major heads, Nigel. There's capex, there's dividend payments. And then there's working capital changes amount, which is actually the largest chunk, 2,600.
Yes.
This perhaps, the working capital bit, perhaps would be something new or additional information.
Yeah, that's the one that
was missing.
That was missing out there. So it's just good to see that they're clarifying on where exactly this cash has gone.
Always. Absolutely.
Otherwise, I'll tell you what, Prashant, we're going to wait for Ambuja Cement's numbers to understand is there something more. And that is next week. So instead of waiting till next week, they've taken a better move and gone ahead and just clarified guys, this is what the position is.
Absolutely. I mean, I think that's a good move. And as Nigel pointed out, ACC also now coming back into the green. The other area which has seen a sharp knock is the life insurance space. And I don't know, Mayuresh, HDFC Life, which is the leader, is in another 4-5% knock after yesterday's 10% sell-off. What's your sense? Have you looked at how much earnings estimates need to be lowered? I mean, the company also will be reactive, right? I mean, they'll and I think Vibha, when she joined us yesterday, said that we will work to basically sell more policies to make up for this. What's your sense?
So, Prashant, I think with the announcements that have come into the budget yesterday, and I was hearing out the management of HDFC Life as well. Obviously, I think the product mix needs to undergo a change with the kind of regulatory changes that have probably come through. The second element, obviously, is with the product mix that will now go through, assuming that a lot more newer products get introduced, the value of new business margins on these products will definitely be lower. Now, life insurance companies were getting valued on two aspects. One, in terms of how the VNB margins were playing out, and the annualized premium equivalents as well. So I think the APE growth is definitely expected to come down for a lot of players. SBI Life probably becomes an outlier in terms of the entire product mix within the life insurance space at this point of time. HDFC Life, the most impacted, considering the budgetary changes which have taken place. And therefore, I think the embedded value and the return on embedded value won't take a knock. Therefore, I think there will be a valuation adjustment and some element of derating which has probably happened in terms of price. Now, it all depends on what kind of traction takes place. And therefore, I think these stocks will largely underperform, in my opinion, at least for the next.
By the way, we are now inching back towards the high point of the day. It's 17,626 on the Nifty. We're in the green now. The high today was around 17,650. So we're just about 30-40 points away from that level. Mid-caps too are holding up pretty okay, up 50 points at the index level. State Bank of India will be reporting its numbers tomorrow. Abhishek is standing by with the key expectations. Abhishek.
Well, Rima, it could be a record quarter in terms of quarterly profits for SBI is what analysts are estimating. So the key things to watch is that the net interest margin can improve YOY and quarter on quarter. Sequentially, anywhere between 5 to 15 basis point is the kind of estimate that analysts are making in terms of improvement in the net interest margin. Now, Kotak Securities expects a loan growth of around 18% YOY and 3% quarter on quarter. Again, Kotak Securities is estimating slippages of about 7,500 crore in the quarter, led by the SME portfolio and the retail segment. So asset quality is expected to improve. ICICI Securities has estimated gross NPA to be about 3.35% when compared to 3.52% in the previous quarter. So how this improvement will come, you need to watch whether it comes from recovery and upgrades or whether it comes from write-off. Management commentary with growth outlook, you need to see that, and the commentary on their exposure to the Adani Group, that will be seen closely. For reference, watch list was around 8,500 crores and restructured book about 27,300 crores. How they move will be seen closely. Our polls suggest NII growth of 20.8% YOY and about 5.3% quarter on quarter. We are working with a profit growth of more than 61% YOY and about close to 2.5% on a sequential basis. Back to you.
Okay, thank you very much for that. Need to slip into a very short break. We'll come back and then 8 minutes to go for markets to close.
Okay, welcome back. There's about 5 minutes to go for market closing, and the market is in the green. So I think all told, after all of that up and down, and just look at that Nifty intraday chart. It's a wild ride, but it's green. 17,617, 17,618 is where we are at. Mayuresh, should one have a the mental makeup should be to try and take longs here, or stay away, or look for selling opportunities in the near term, near to medium term? What's your sense?
Absolutely, Prashant. So I think on the O'Neill lens, we're waiting for a rally attempt, which basically means we need the markets not to break the recent lows that they've done. And if we get a follow-through day, which is a reasonable 1.5% move on the Nifty, we'll probably get it to a confirmed uptrend. Having said that, I think stocks where the earnings profile has remained strong, that should probably come onto your watch list. And we have definitely created a watch list. So Polycab, APL Apollo Tubes just reported a decent set of numbers. Do remain on our watch list. As I said, Britannia, ITC, probably very, very close to pivot levels as well. And a lot of these infrastructure railway stocks on our watch list as well. So Siemens, a little bit away in terms of price strength, or even something like an SKF bearings as well. Significant amount of expectations on railway capex can be played out on these stocks. So creating a very healthy watch list, Prashant, at this point.
All right, Mayuresh, we'll leave it there. Thank you very much and speak to you soon. Appreciate it. Well, that's Mayuresh Joshi. The market is ending almost unchanged as if, compared to yesterday's close, 1 point change. But that's not to say that things did not stocks did not move around. So let me just quickly tell you where there was action. I'll start with what was higher. So FMCG was up. Britannia, ITC, HUL are some of the top gainers on the Nifty. And then IT was up. So you had Infosys, Wipro, TCS, HCL Tech as a pack, which did pretty well. IndusInd Bank, in the Bank Nifty constituents, IndusInd Bank is the worst performer from last Wednesday's close. And IndusInd came back about, 3-4% actually. And I think there was Axis Bank, which was up about 1.5% as well. On the downside, of course, it's Adani Ports and Adani Enterprises, which saw outsized cuts. But, I mean, UPL was down 6%, and there was HDFC Life, some of these we discussed, which was down about 4.5% as well. Rima.
On the gaining side, it's FMCG top honor. Strong numbers coming in from Britannia. ITC reports numbers tomorrow. These two were the top gainers at fresh 52-week highs. In fact, for ITC, it's a record high. HUL higher in trade, though on the flip side, Dabur reported numbers towards the close of market hours. A miss on the volume growth, volumes degrowing by 3%, and the street was disappointed. IT did well, supporting the markets. Infosys, Wipro, HCL Tech, TCS, 1.5% rally on them. IndusInd Bank, the bank clarifying their exposure to the Adani Group. And after the drubbing that IndusInd Bank has got over the last couple of days, the stock has rebounded. On the outside of the index, when you look at the mid-cap index, the rest of the Adani Group stocks, the cash stocks, the non-F&O, Adani Total Gas, Transmission, Power, Green, all of them taking it on the chin yet again, with names like Adani Green down 10%, Total Gas down 10%, and Power down 5%.
Yeah, so troublesome day continuing for all of those stocks. I'm just looking at some of the other names like IDFC First Bank, 5.5% up on this one. Ambuja, we've been discussing that stock going into close, 5.5% up on Ambuja. RBL Bank, Ujjivan Small Finance. So these are some of the tier 2 financials, Federal Bank as well. You saw some bits of green on the screen at least, even a South Indian bank for that matter. On the flip side, however, the result reactions came in and it wasn't a good one for Dabur. Stocks going home with a cut of about 1% or so. Godrej Properties, a little lackluster post the earnings as well. Mahindra Holidays down 3%. So these were some of the major earnings announcements. Firstsource is a good one in terms of earnings reaction, 3.5% on the upside on Firstsource. So very mixed picture across mid-caps. Banks doing well, but I guess the market will just heave a sigh of relief that at least there was no capitulation today following the news that we got late last evening.
And tomorrow is going to be a big day. State Bank of India, ITC report their numbers. So we're going to be watching them very closely. It's a wrap and closing bell from the entire team. Thank you for watching, but don't go anywhere. Our Thursday special, Big Deal, comes up next.